What's good? Welcome to the daily bias video. We're gonna do like 2 of these to try and help you guys out, figure out your daily bias. Right, we know how to execute now, and one of the biggest keys is not executing purely based off of the execution strategy, but playing into your daily bias as well and understanding where market wants to go for the day. Because if you take a trade that's in the opposite direction of where you think price is going to go for the day, odds are you'll probably end up being a very short-lived trade, or you'll just be losing that trade in general. Okay, so to start off, right, the best thing to do is just top-down analysis. Start on the weekly time frame, figure out where is price going on the weekly. Where does price want to go for the week? Okay, and the easiest thing to do is literally just look at it. Look at recent price action. What is it doing? It's going up. Perfect. Scale down to the daily. Okay, what are we looking for on the daily? We're looking for trend. Okay, so if we just look at overall trend, again, this is similar to the weekly. What are we seeing? Boom, bullish, right? It's just going up. The best thing to do, where is price going? It's going up. Let's go golfing. Bring out the cappuccino. Let's go golfing. Let's go golfing. Bring out the cappuccino. Anyways, the line chart is saying go up. So what do? We go up and we put it in their butt, okay? It's going up, so what are we looking for? Again, weekly long-term bias up. Morning wood. Okay? This is where we find our daily bias on the hourly time frames. Okay, we use the daily. I like to use the daily current market structure to figure out my daily bias and then how to kind of form it off of that, right? So right now, what is the daily market structure? We get a break of structure to the downside. So I'm bearish on the daily. Prior to this candle to the downside, I would have been bullish. Not anymore. Now, right, let's look at current price action. So we're in a downtrend on the daily. So what are we looking for? We're looking for sells, and we're looking for some sort of confluence to give us sells. So what would that be? Our execution tactics on higher time frames. Okay, so we're looking for draws on liquidity, right? Would be here, and look at this, right? We had a liquidity sweep today on the 4-hour, okay? And I like to look at the 4-hour trend as well. Unfortunately, for today, we're in an uptrend on the 4-hour currently, right? Maybe we can close below this low and break structure again. That would be ideal because now we have the 4-hour and the daily both saying bear. And then all you got to do from there is go on the hourly, find high confluence areas, and execute. But right now, we're in an uptrend on the 4-hour. So this is where it gets tricky. Okay, you want to know, okay, the weekly direction is up. However, we're not really playing completely off the weekly direction. Okay, yes, we can probably target some super long-term take profits if we're about that, if we're about the swing trading lifestyle. Me personally, I'm not, but it helps to understand where the weekly time frame wants to go. And it's super easy. Just look at the current trend. Look at that line chart. Where is it going? Up. Cool. Bullish. On the daily, though, we're bearish. And on the 4-hour, we're bullish. And on the 1-hour, we're fucking around. We're in between. We had like a break of structure here, but like not much to do off of it. Okay, so I didn't trade today because we had Powell speaking, but today is a perfect example of when we probably wouldn't want to trade the S&P 500. Unless we can find some sort of bearish confirmation. So how would we find that? Go on the hourly, right? And again, this is where we find our execution strategies. The daily time frame, we have a break structure to the downside. Cool, so we want to be bearish. We're looking for any sort of bearish confirmation. But we also have to keep in mind that we are bullish on the 4-hour. Okay, so that means when we're looking for bearish confirmation on the hourly, we have to take keep in the back of our mind that, hey, we are still bullish on the 4 hour, and until we turn bearish on the 4 hour, we can't target, and we'll talk about this in our taking profit video. We cannot target these absurd long time frame take profits because we haven't been proved to the downside on the 4 hour. So yes, we can look for bearish bias on the hourly because the daily's saying down. But we need to be tentative with our take profits on this. Okay, so my biggest rule of thumb is like, okay, figure out what the daily time frame is saying. What's the daily time frame saying on gold? Bearish, cool. Our ideal trades will be to the downside. Guys, because believe it or not, the majority of the daily moves on the S&P, if that's what we're talking about, is going to be during New York session. Everything else is just chop. The biggest move, what causes these big moves to the upside, these big moves to the downside, is New York session. So wouldn't you want to be trading within the bias? You probably would, until you're proved wrong. And those are the trades that you lose. When you're proved wrong, but then when you're proved wrong, it's good because it's like, cool, I did everything correctly. Market just broke structure and we had a shift in market structure. I stuck to my plan, I stuck to my bias, and market just wanted to change direction. Okay, so like for today, for example, we're bearish on the daily, but we're bullish on the 4 hour. We scale down to the 1 hour. We don't have much. We're looking just for any type of bearish confirmation. We have highs through here. So what would I have done today? You know, maybe I'm obviously trying to be bearish, right? So we see this high get taken out. Okay, cool. Then we get a break of structure to the downside on the 15-minute. Even cooler. This is where orders were filled. This is an order block. Again, we're getting a little bit too deep now. But this would be like an elite entry for me. Does that make sense? We use the daily time frame to figure out the bias of where price wants to go. Okay, right? Like we break structure to the downside on the daily right here. We break structure with this candle. Okay, when we go into the 4 hour, right, this up, 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 we don't break structure to the upside. Okay, this was probably a liquidity sweep on the hourly. And once we get our daily bias, once we understand where, literally like where is the daily telling us price wants to go? Because again, like I said, the daily candle moves are off of those big session moves. So odds are that your trade is going to be, the majority of this daily candle is very highly likely. And if it's not, you're probably getting stopped out because it's going in the opposite direction. Means your daily bias is wrong. Our daily bias, we want to know where price is going to go for the day so we can make a short-term execution within several hours, right, to catch that move that's happening on the day. And when does that happen for NYSE? Or sorry, when does that happen for the S&P? During New York Stock Exchange Open. Okay, so like here, we get a break of structure to the upside on the daily. Scale down to the 4 hour. Okay, what can we be looking for? We're looking just for bullish confirmation, right? Because we already broke structure to the upside on the daily. That means even if we break structure to the downside on the 4 hour, that means we're retracing on the daily. That means perfect. We're prime time getting ready for a setup on the daily. That means we're getting a daily retrace. So what can we use to our advantage? Our building blocks. Equilibrium comes into equilibrium. What's this? A fair value gap comes into the fair value gap. Then what can we do? We can scale down even lower, right? Then what are we waiting for? We're waiting for like hourly confirmation. Okay, cool. We get a break of structure to the upside on the hourly. Then what? Okay. We have an order block here. That doesn't get hit. We see a bearish candle on the hourly. Cool. Boom. Equilibrium gets hit. What else gets hit? The fair value gap within here. Let me get rid of the order block that we made. Boom. Fair value gap gets hit. Equilibrium gets hit. How can we take a trade off of this? And again, I know we're getting ahead of ourselves. Ah, damn it. It's too far in the past. How can we take a trade off of this? This was literally during New York Stock Exchange Open. We're bullish on the daily. We see a 4-hour retrace down. We see hourly confirmation to the upside. To me, that's giving, pretty strong bias to the upside. What can we do? Scale down to a lower time frame. Find even more confirmation. 15-minute breaker structure, 5-minute breaker structure, 5-minute order block, 5-minute, all of that shit that we talk, our executions, that's where we go from there. Once we understand, okay, cool. To find your daily bias, it's as simple as this. What's the trend on the daily? Look at the market structure. Okay, are we in an uptrend or are we in a downtrend? And that doesn't, it literally like the line time frame, that doesn't matter. That's just giving us weekly bias. And we don't really care about that because we're trading day to day. If you're a swing trader, you should care about that. But for me, I don't care about that too much. Okay, I'm just trying to figure out where are we going on the daily time frame. Look at market structure, right? Because I'm trading within hours, right? Within the day. So where is the trend on the daily? Uptrend or downtrend? Find the trend. Boop. Boop. Then, okay, find bullish confirmation. Find bullish confirmation on high time frames, like the 4-hour or the 1-hour. So what do we use to find bullish confirmation? Our building blocks, our execution points. Imagine you're trying to take a swing trade on the 4-hour and the 1-hour, and you're finding a good spot to go long or to go short based off of the daily trend. And then once you find those, right, maybe, okay, we're bullish on the daily. We come into a fair value gap. We're tapping into a daily order block or a 4-hour order block, or we see a break of structure on the 1-hour. Then scale, or once you are within once we get within those price ranges, right? So let's say, boom, daily, we're bullish, we're bullish market structure on the daily. Okay, the 4-hour, maybe we're in a downtrend because we're in a retracement on the daily. That's ideal, right? We see price come into a 4-hour fair value gap, a 4-hour order block. Okay, and then we scale down to the 1-hour. We see the 1-hour has already broken structure. Scale down to the 15-minute. Okay, find execution points to enter. Find that liquidity sweep on the 15-minute. Find the break of structure on the 5-minute. Find an order block on the 15-minute. Use your building blocks, use your execution points to do this. So to find daily bias, you're almost imagining that you're trying to take a trade on a high time frame. This will help a lot because this is like literally what I do, right? So if we go onto the S&P, right now, what do I see on the S&P? Break of structure to the downside. Where are our draws on liquidity? We have highs up here. Go to the 4-hour. We sweep these highs. Scale down to the 1 hour. Okay. Now what do we have? Okay, we took out these highs, and guys, the great part is we're not trading on the high time frames. So we don't even have to be exact with this shit. Okay, so we're bearish on the daily because we broke structure. We have this draw on liquidity. We sweep it. We get a break of structure on the hourly right here during London session. Are we going to trade that? Hell no. It's the S&P 500. Who's trading the S&P during London session? Perfect. Okay, we're still bearish because this is a high time frame trade that will likely take a long time to happen. Okay, then what do? We see a liquidity sweep. We see a break of structure. This is literally a trade that is setting up in front of our eyes. We see a fair value gap. We see a order block. We find equilibrium. Maybe we purely enter off of equilibrium. And then guess what? And then from there, sure, we can target some 4-hour retracement levels because we broke structure to the upside on the 4-hour. Right, so what would retracement levels be on the 4-hour? There's an imbalance here. Maybe find equilibrium from this swing up to here. This is a take profit. This is a take profit. What else do we have? We have the leg down that caused the move up. This is a take profit. All off of this baby ass entry. And how can we get an even more precise entry off this? 5-minute time frame. Wait for confirmation. Boom. This is our fair value gap. This is our order cock. What are we waiting for? We're not waiting for just a down candle. We're waiting for 5-minute break of structure, right? Because technically, this is a 4-hour trade now. A 4-hour or an hourly or like a daily confirmed trade that we can end up taking like daily or hourly or 4-hour take profits on off of a 5-minute execution. And that's how you take good trades day in and day out. And that's how you find your daily bias. You're pretty much imagining, okay, how would I take a trade on the daily 4-hour and 1-hour time frame? Where would I like to take the trade? Okay, where are our building blocks confirming the daily bias? And then scale down and find more execution points, more reasons, right? Because on the 15-minute, you're probably seeing, oh, liquidity sweep, break of structure to the upside, right? Are we bullish? No, bro, we're bearish. So we're waiting for these price points to get hit and then give us bearish confirmation, right? Right. Okay. So that's as simple as I could put it. This is honestly a good trade too. I honestly might take this. This is a great trade. Right? Wait for a 5-minute break of structure. And then where can we target? We can target, again, equilibrium off the 4-hour. What else can we target? Daily draws on liquidity. Right? If we're looking at the weekly's in a fat ass uptrend. Weekly probably needs to draw towards equilibrium. Where's equilibrium on the weekly? Right here. If we're in a downtrend on the daily, what does that mean we're doing on the weekly? It means we're retracing on the weekly. What do I see here? I see a fair value gap. What do I see here? Liquidity. What do I see here? An order block. You see how we can start putting this together, and then all of that off of 5-minute execution, off of 15-minute execution, because we're putting it all together. We'll do this again tomorrow, because I know that was a lot. Okay, we'll do all of this again tomorrow, and I'll show you more examples of it. And when I'm doing my trade recap, when I'll do my trade recaps from now on, I'll start covering daily buys from now on. Okay, instead of just scaling down instantly. Okay, so make sure you watch those. Make sure you keep watching all the bootcamp videos. We're getting there. We are slowly but surely getting there. As we start adding more of these building blocks, it's giving me more of an ability to start like just unloading, because like right before I was so limited at what I could say, what I could do, what I could show, because I was like, oh, they don't know this, they don't know this. Now it's like perfect. They have all the building blocks. I can just dump. And that's what this video was, right? If you couldn't tell, it was literally me just spewing. And I want to do this again. Maybe we make this a 3-part series. Okay? I'm honestly considering this trade. But anyways, I'll catch you boys tomorrow. We'll go over daily buys one more time. Stay safe. Trade well. Don't over risk. Don't over leverage. I'll catch you boys. Peace.